Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Analyst Update for the 8th of July, Friday 8th of July. On the 4 Majors, starting with the Euro against US dollar on our CTC strategy template. Let's have a look and see what's been happening in the past couple of days. Well, you can see that Euro was able to find a bit of momentum yesterday after we started with a lot of negativity in the market. We saw price revert to the upside during the US session on good news out on the interest rates and talk from Mr. Trickett yesterday. A lot of good news came out and we saw price actually end up to the upside of the wick as the US session progressed. This morning on the Asian market, however, has been indecisive. You can see the indecision candle here on a daily time frame. CTC is still blue across the board, and you can see that the intermediate trend is still in play. You can see that the trend, however, is still with us. Notice we're having it bounce to the upside. Price is now trading at this swing over here. If this is the momentum to further, it needs to obviously close higher than the previous one, dictating further upside movement. It'll be interesting to see because we've now broken through a prior resistance level in the past, and we're looking at potentially that as our first target. The prior resistance level here that you see on the previous weeks leading up to the stage. We had a failure and we've seen some downside movement. We're going into the first Friday of July, so we've got non-farm payroll today, a US dollar. They've got unemployment rates, etc. Yesterday the unemployment figures were quite good, so they're expecting a better. You notice that the previous figure before was 54,000. They're expecting a forecast of 97,000. So it'll be remain to see if that figure is higher or lower than that. But as it stands now, the euro has been able to find a bit of support yesterday. Will it continue to find support and push higher to see another reattempt at this intermediate trend to the downside? So roughly around the 14,500 mark is to be seen. Ideally, we'd like to see another bullish move to the upside here to confirm that the momentum is with us. If until such time as that's done, then we're looking for further downside movement and probably another retest of this major trend before we see price revert to the downside. We are in a consolidation squeeze now. You can see that price as we've been going sideways. This consolidation squeeze is getting tighter and tighter. There's likely to be a breakout soon, and that breakout will definitely give us the indication what's likely to occur for the following months ahead. So just be aware of that. If we see further upside movement today, it'll be primarily that the US dollar has obviously lost a bit of ground and euro finds a bit of strength on that. But as it stands at the moment now, we've seen a lot of down movement followed by a long trading wick and a clear hammer. Here, if this hammer is to remain, we need something similar to this. So we need another candle like we've seen here before. Nice bullish engulfing candle, which will dictate what's happening in the next week or so. Next up is sterling. You can see where sterling's come from. And you can see it's broken the major trend just recently. And price has fallen lower since then, forming lower highs. You can see the whole intermediate trend now is negative. It's got stronger, this downtrend has got stronger over the past couple of weeks leading up until where we are now, and you can see that price failed to break higher than a previous support area here. So prior support and support, breakout, pullback, failed, new resistance, and price has reverted to the downside because of that. We've seen price push off on the underside of a prior support area, now a new resistance, and we've seen it fall lower. We've seen the 1600 being the all-time support, strong support and resistance in the past. This being reattempted over the past couple of days, and yesterday's action has seen price a small trading range, nonetheless still to the downside and still closing lower than 1600. So psychologically, the long-term traders are still looking for further bearishness on this pair. Ideally, we'd like to see price trading or closing lower than the previous swing. This one here, this hesitation here, just above the 15,900 mark. Trading lower than that will definitely see the bears selling this. And ultimately, we could look at targets right down here at 15,3500 as a possible long-term point for sterling against US dollar. So as it remains now, we're still trading below 1600, so we're still looking short. Ideally, if you want to see bullishness in this, then we need to be trading well above this prior strong support and resistance area, ideally above the 1600 to start with, and ideally above the institutional moving average at 1605. Once we get above that, then we're looking at potentially further upside movement. But until such time, CDC is still negative, and we should be looking for further shorting opportunities for the sterling against US dollar. Just be aware, as I mentioned, we have non-farm payroll today. It's the first Friday of the new month, July, and we've got the figures coming out today. So take those on board. Be aware of it. We could see volatility prior to the news and after the news. So let the market make its decision, and then we trade the decision for that. Next one is the US dollar against Swiss franc. You can see here that we're in a negative trend. We have been in a negative trend for some time. However, we've seen the US dollar gain a bit of strength recently. You can see that price has bounced off a very strong support area that we've seen recently, just below the 835.50 mark, and we're now testing a prior support and a new resistance and the major trend. You can see price has been squeezed now, and it looks like we're going to go, it's reattempting it. So the US dollar trying its best to try and bounce off this strong support level. You can see since the early part of June, we've seen price reattempt this twice, and we're trying to get some upside movement. Yesterday's up candle has now formed a swing. I thought this was going to be bearish because we saw an evening star pattern here, which didn't kind of materialize because we're quite close to this support level. But I thought we were going to see further downside movement. That didn't occur because we had another indecision candle, a spinning top, then followed by yesterday's price action to the upside. Saw price reattempting this major trend. The actual wick formed, we saw price trading well above and testing the prior resistance level. Here, the high of the spinning top, and closing low on the US session. However, on the Asian session going into the European session this morning, we've seen price continue that upside movement. If it closes higher than this, then we're going to be looking at 855. So intraday, if the US can gain some more strength today and there's positive figures coming out unemployment wise, we could see the US dollar reattempt the 855 very soon. So as it stands now, we're seeing price trading on the other side of the moving it, but obviously we need to see a decision candle. If it breaks, closes higher than this, then we're going to see the CTC probably turning blue in the not so long, near future. Ideally, if we want to see blue candles and the blue across the CTC, then we need to be trading above this 855, which happens to be a long-term resistance level for this pair. So you can see if I box it, it'll give you a clear indication of where price is trading now on a daily time frame. And if we to see further movements, whether it's to the downside or the upside, we need to see the box being breached. So if I can get let's green one, there we go. So see, we're consolidating in this range, price support, new resistance, and the major trends in our favor. It's trading above the 20 period moving average, which is great. 50 period is the next one it needs to get to, which happens to be at the top end of the box. So price has to be trading above, well above 860 in my case, to see a nice bullish move to the upside, and closing higher than 860 would definitely confirm we're looking at further upside movement. However, if we're still in the box, we could see price reverting back down to the 835.50 mark. A bearish candle below than that would definitely signal that we're going to be looking at either, if I'm not mistaken, if you look at the long-term picture for this, we could be looking at, ultimately, if you take the prior swing, in this case, we could be looking at 881 or the 820 as the next possible target for this pair as it reattempts the lows. So you can see we've been squeezed now to the downside. Ideally 820 will probably be on target if we break below the 8350 very soon. Last pair of the day for this Friday, the 8th of July, is the US dollar Japanese yen. You can see as the same with its the chief. the US dollar finding a bit of strength against its counterpart. And in this case, you can see that 80 has been a strong support level for the US dollar against Japanese yen. You notice overall the US dollar has been in a falling pattern against the yen. However, we've been in a very strong consolidation trend. Notice the highs still getting lower as we've gone sideways. So from where we've been, we've just gone sideways, and the longer we've gone sideways, long term, it looks like a very strong support area, and we could see a potential bounce to the upside. As we're seeing now, we've seen the 80 mark being tested in the past, a number of occasions through early parts of May, early June, then again in mid-June, and then we've seen the US dollar rally since then, forming higher swings, which confirms our upward trend. And now, for the first time, you can see the price has now broken above a strong resistance level, a squeeze breakout. This we could see ideally going towards the next trend or the trend line. So we could be looking at, ultimately, there's a bit of support to resistance, roughly around the 81.80 mark or higher, 81.90, thereabout. But back to the trend line, this major trend line, which will take us back to just below the 8200 mark, which happens to be the strong long-term resistance level. Needs to be trading above 8200 miles. CTC has gone blue on the daily, which confirms that we should be looking for upside movement now, nothing less. A lot of empty space here between. We've got a slight hesitation here, but at 88.150, but ultimately looking for further upside movement for this pair as price reverts and closes higher than the previous trigger points here. That's it for today, guys. Just be aware that it is non-farm payroll today, the 8th of July. So if you are trading, please be aware of the volatility that's going to occur during the course of today. The markets have been very volatile this week. There's been a lot of news out this week with interest rates, etc., across Europe, across Britain. We have non-farm payroll. The payroll figures yesterday, unemployment figures yesterday, and on the states were quite favorable. In fact, we had better than expected figures, which helped the US dollar. So just be aware of that. The ADP non-employment change, they said 66. They were forecasting 67,000. It came out at a positive 157, so almost doubled. So the US dollar really gained a bit of strength in that, and that could really be a factor in today's unemployment figures. So take that on board. All the best. Have a great weekend with family and friends, and most importantly, trade serenely.